There's something interesting going on for the POL or the Matic token. We have been in a long-term downward trend, but it seems like we are now making the turnaround. The question is, what's triggering this turnaround? Who is buying here? Who is selling here? Let's have a look at the on-chain data, the data most people are not considering. Now I'm using POL and Matic interchangeably in this video because those two tokens are directly linked with one another. It all started out with the Matic token and then a migration to POL happened. This here is the relative price of POL to Matic, so it trades in a very narrow range over time. Now on this channel, I do not like to look at US dollar charts because US dollar charts don't really help us much because all cryptocurrencies are highly correlated with Bitcoin and Ethereum. When Bitcoin and Ethereum is going up, then most altcoins go up as well. When Bitcoin and Ethereum is crashing down, most altcoins crash down as well. So really, when we take on the additional risk of buying a smaller altcoin like Polygon Matic, we should expect long-term outperformance. Why else take on that risk? And so what we see over here, this is the Matic price or the POL price relative to Bitcoin. Since February of 2023, we have seen constant underperformance. This here is a drop of 96%. But maybe things can turn around again. There is the potential for a breakout. In the past, we have seen massive rallies from the current price level. This here is an appreciation of more than 2000%. Now maybe the comparison to Bitcoin isn't really the best because Polygon Matic is a layer 2 scaling solution on top of Ethereum. So probably the price is more correlated with the Ethereum price. Let's have a look at Matic relative to ETH. We then get this chart over here. The overall dynamics aren't really that different, but there is a clear difference with the recent rally. We are not at the upper end of the trading channel yet. Matic still has the potential to outperform Ethereum by 50% and still stay within the range. The question is whether or not such an outperformance is the likely outcome. Let's have a look at valuations, whether or not Matic is now expensive or cheap compared to other comparable cryptocurrencies. Because right now the market cap of Matic is at $3 billion US. Let's compare Matic with Avalanche. Avalanche has a market cap of 10 billion. So this would bring the Polygon Matic price 3x from here, would get close to $1. Matic has a total value locked on chain of 1.2 billion. Avalanche has a total value locked of 1.2 billion. So relative to the market cap, Matic seems to be rather cheap because Avalanche does not have more than 3 times the TVL. It only has roughly 80% more total value locked. Now Avalanche is its own blockchain. It's completely independent from Ethereum. Let's compare Polygon Matic to other layer 2s. In here, Matic is already one of the largest players. We've got Mantle, that's 20% larger in terms of market cap. But here, the total value locked is minuscule, relatively speaking. So again, Matic doesn't look that bad in terms of valuation right now. Now, there used to be a time where Matic had 10 billion worth of total value locked. That was during DeFi summer. Subsequently came the massive crash where also Celsius and FTX and Terra Luna imploded. But if we just look at the recent development, it's not that bad anymore. We don't have that much growth. But again, this is measured in US dollars and Matic did have a hard time with the price performance. If we look at the total value locked measured in POL or in Matic tokens instead though, we do have quite a bit of growth. Now the question is, what happened over here? We saw all of this appreciation and suddenly the usage of the blockchain went down massively. The reason for that crash in usage is Donald Trump. Now, it's not regulation, it's rather the election of Donald Trump. Because one of the major decentralized applications on the Polygon blockchain is Polymarket. And many people bet on Donald Trump winning the election. And once the result was clear, the bets got settled. And that's when a lot of capital left the Polymarket application. But if we take away this massive spike and decline, we still see constant growth over the years. Now, this is not the first video on Matic on this channel. I publish videos on Matic regularly, so feel free to subscribe over here. If you so far got some value out of this video, feel free to also, of course, give this a like. It will help the channel grow. Let's get back into the usage data. This is the amount of stable coins on Matic. Yes, the chart isn't that pretty, but in the last 2 years, we did see quite a bit of growth. Again, this is partially driven by Polymarket. Here we've got the number of transactions over time, a massive rise with DeFi summer, then a decline, but now we are stabilizing at a somewhat constant rate. Now here's the number of active addresses over time. There is a case to be made that we actually do see growth, but again, we have to remove the spike that we saw during the US election. Still, if you take away this, it looks like over time we have some slight growth of Matic. Now all of this looks quite positive. Why on earth then do we see that Matic underperforms Bitcoin and Ethereum that constantly? If we see somewhat constant growth, what's going on with Matic relative to Bitcoin and Matic relative to Ethereum in those charts? The answer isn't that straightforward. It might be a mix of tokenomics and the loss of trust because the tokenomics got updated, or potentially also some hidden selling. This is the circulating supply of the Matic token before the migration to POL. Everybody knew that at the beginning, Matic is a risky investment because the supply grew very quickly and the demand has to grow quicker than the supply for Polygon Matic to outperform. But then people thought that the token inflation is completely over. But that was not what happened. There was the migration to POL and suddenly Matic became an inflating cryptocurrency again. And that has not been received that well by the community. And so the question is, what's causing this recent underperformance? Is this token inflation here already enough to depress the price that much? I do not know. The tokens go to the community treasury and to validators. And in percent, the inflation isn't really that bad. But the question is always how much of the Matic is actually liquid. And maybe there isn't as much liquid floating POL tokens. And so just a little bit of token inflation can potentially already have quite a bit of impact on the price. I hope that at one point the selling pressure will end because the usage of the platform tends to grow. This is the number of traders on decentralized exchanges on the Matic blockchain. It's a chart that starts in July of 2024 and it tells a very positive story. In the near term, we do have a problem though, and that is short-term levered capital in the asset. Because we don't just have the spot market for price discovery. In the last 24 hours, we saw 46 million worth of POL getting traded on the Binance centralized exchange. But we saw very similar levels of trading volume on the perpetual futures. And most perpetual futures traders tend to bet on rising prices, as in the longs have to pay the shorts in order to get more price exposure. But that also means that it's mainly the longs that get liquidated over time. And really the issue is that currently there's quite a bit of attention on Matic. We have seen a rally in the last month, and so the trading volume on the perpetual futures also went up. And there is positive correlation between trading volume and the spot price being in yellow and the trading volume being in green. The highest correlation though is between the spot price and the open interest, as in how many bets are currently made on the Matic or on the POL price. Whenever there's more bets on the perpetual futures market, the spot price tends to go up as well. As there are less bets on the price, spot tends to go down. And currently we are very high with open interest again. Once this goes down, once this delevers, this has a negative impact on the spot price. And so there is a good chance actually that Matic will, unfortunately, at least this time, not outperform Bitcoin and break through this resistance. The long term might be positive if we do not see this constant sell pressure due to the lack of trust, due to the insiders, due to the tokenomics. If we don't see this constant sell pressure, then Matic has the chance to outperform Ethereum and Bitcoin. But right now there's so much short-term leverage in the asset that could delever at any point in time, and the momentum is still bearish, that I wouldn't necessarily bet on that breakout. I personally do not bet on the breakout. I just stay away. Now, personally, I'm a friend of not just trying to ride the waves, not just trying to find the next altcoin that does a 10 or 100x. I'm a fan of trying to find strategies that perform independent of the market environment. Now, I want to share the latest results of the relative valuation trade strategy. So that's the community capital pool. This is where I trade for the premium members of this channel. It started 2 months ago and annualized we are now at 72%. Now, besides just this positive performance where we go long Bitcoin, Ethereum and Solana, and we go short many other inflating altcoins, I'm especially proud about this because Bitcoin plus Ethereum plus Solana just went sideways during the same time period. So this is the performance while the market did nothing. And this, I believe, is where the real key for money making lies. It's not trying to ride the hype cycles or the attention waves. It's more about finding structural inefficiencies in a market and then set up strategies that take advantage of those inefficiencies. I've used this relative valuation trade approach already for quite a while, roughly 4 years. So yes, the community pool trading only started 2 months ago, but because I did the relative valuation trades with my own account, I outperformed just dollar cost averaging Bitcoin by quite a bit. So had I just dollar cost average into BTC, I would have gotten the performance here in this gray line, but instead I got the performance here in black. And so really the question is, if you still want to find the next 10x altcoin and then lose all funds in the process, or if it's maybe better to follow a strategy that tends to make money long term, independent of market conditions. This is what I'm trying to achieve here. Because let's think about this fundamentally. Why was Bitcoin invented in the first place? It was invented because of the money printer, right? Because fiat currency expands over time. There was the bank bailout where the banks got all of this capital injection at the expense of the average person. The purchasing power of US dollars went down. And most people underestimate how quickly the purchasing power is going down. This is USM2, it's the US money supply, and this grew in the last 66 years by 6.8% every single year. So compounded geometric average. This is the linear scale. On a logarithmic scale, this looks pretty much like a straight line. So it's 6.8%. It's that growth why Bitcoin exists. Because it's extremely hard to increase your income every single year by 6.8%. There are a few people that benefit from the system, from the devaluation of the currency. It's a massive hidden tax that concentrates capital further and further in the hands of a few. And so the global financial crisis is why Bitcoin was born, right? This is the S&P 500 that crashed by more than 50% in a very brief period. And the very first block, the Genesis block, had a reference to a New York Times article. Chancellor on brink of second bailout for banks. So that was the bank bailout in Germany. And so the idea of Bitcoin was always to be the hardest of the monies, right? A peer-to-peer system, completely independent of the evil banks. At the beginning, the inflation of Bitcoin was very high as well, but it was high just in order to attract adoption, which in the end, of course, was very successful. But now it's not high anymore, right? It's only at 0.8% per annum, and more Bitcoin every year gets lost than gets mined. So actually, Bitcoin is now a net shrinking asset in terms of circulating supply. It becomes more and more rare. Now, why am I talking about all of this? I'm talking about this because Bitcoin's intention was to be hard money. Bitcoin's intention was to escape the inflation. Now, for most altcoins, it's the exact opposite way. The token inflation of most altcoins is even worse than fiat currency. And that's why even versus fiat currency, most altcoins go down. But they especially go down versus Bitcoin long term. Here are a few random examples that I just took from this website, Tokenomics.ai. This is IOTA. It started at a token supply of 2.7 billion and is now at 3.6 billion. And here's IOTA relative to Bitcoin over time. Next example, here we've got Axie Infinity. Again, I just took something random from this website. I did not handpick those charts. Here's Axie Infinity. It started at 60 million and it's now at 266 million. This is much worse than how quickly fiat currency inflates. And here is Axie Infinity relative to Bitcoin. I'm not going through every single number now, just showing the general trend. This is Aptos, and here is the Aptos relative to Bitcoin chart. Here is Arbitrum, and here is ARB relative to Bitcoin. Here we've got ApeCoin, and here is Ape relative to Bitcoin. And again, those are not hand-picked examples. Most altcoins look exactly this way, and it's all because of token inflation. Whatever goes up constantly in supply, when the demand cannot catch up, tends to just go down in value. It's just the law of demand versus supply. This is how prices get discovered. It's economics 101. And so I'm taking advantage of this structural inefficiency in the crypto market. That's why I'm able to outperform Bitcoin. I'm not buying those assets. I am betting on falling prices of those assets, especially relative to Bitcoin, not just in US dollars. The strategy doesn't work. This is, by the way, the performance of the smaller altcoins in the last year. In the last year, Bitcoin doubled in price roughly. So there's only 3 out of 100 altcoins that did better than Bitcoin. 97 did worse. And this is no coincidence. And so we are constantly making money with this strategy. We are shorting various altcoins with high token inflation. Here are a few trades shared by the community members. I'm of course sharing my trades as well. You can simply just copy trade me. But the reason why most people never attempt to do this approach, to bet on falling prices of bad altcoins while simultaneously betting on rising prices of Bitcoin and Ethereum and Solana, the reason why most people don't do this is because they don't know how to set this up, or they are scared of the potential risk. Because everybody says that betting on falling prices is so risky. But it's only risky if you don't know what you're doing. And so that's why I created dedicated tutorials on this. And it's actually not that complicated. You just have to watch 2 videos. It's this one over here, using perpetual futures, and it's this one over here, risk management with relative valuation bets. It's in total 1 hour of content. And after you've watched this and you've joined the community, I will share my favorite trade with you. My favorite trade is structured in the same manner. So we bet on rising prices of Bitcoin, Ethereum, and Solana, and we bet on falling prices of one particularly bad altcoin that continues to underperform extremely consistently. I'm so confident in that trade that this trade will make money in the next month, that in case when you open that trade that I will share with you once you join, in case you don't make money with that trade after 1 month, so during the membership period, if that trade is not in the green, then I will simply refund the membership fee for you. You either make money with the trade or you get your money back. It's that simple. And so here is that fee. It's $125 per month. And again, if you don't make money with the first trade that I will share with you, you will get those $125 back. If you want to be part of the copy trading vault, so where you automatically get the execution of my trades, you don't have to manually copy trade. I still share every single trade I do. But if you don't want to manually execute all the trades yourself, you can become part of the copy trading system as well. Not right now, unfortunately. All deposits have already been closed until end of the year, but there will be a new copy trading pool at the beginning of next year, January of 2026. Access to that copy trading pool will be restricted to the annual members. So if you want to already sign up for that, you can do so. Everybody that signs up for the annual membership will get access to the copy trading vault, but you can simply start out with monthly and then switch to yearly later down the road. That's totally viable as well. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.